Andrew, ahead of earnings, you upgraded two stocks yesterday. What were they and why?
Sure. The two stocks I upgraded were Continental Resources, ticker CLR, and Arena Resources, ticker ARD. I upgraded both of them from neutral to buys, but did not change my price target. They're both, ironically, $46 price targets. The reason I did it are twofold. First of all, I am fundamentally more positive on oil stocks than I am on gas stocks, and these represent the last two of the oil-weighted companies that I cover. When I looked at their activity sets, aside from the fact that Continental's been adding hedges, and I think Arena will add additional activity in 2010, I think their activity profile should be more robust. Additionally, when you compare them to the rest of the space, the stocks themselves had underperformed over the last month, and they're down 10 to 15%. So I felt that the combination of those two made it the right time to upgrade.
And when you talk about activity, are you talking about inventory?
Yes. When I say activity, I'm referring to how many wells they're going to drill in their key plays. And if you look at Continental Resources, their key play is the Bakken oil shale. It's an oil shale up in North Dakota and Montana. And they're raising rig count from 2 rigs last year when oil prices were down around $30 to getting to 15 rigs this year with oil prices closer to $75 to $80.
So outside of earnings obviously coming up, are there other catalysts looming out there that can move your sector?
Yes. On the catalyst side, short term, what I think will be important are year-end reserve reports. As we had discussed earlier, with the change in pricing, we're going to see how gas companies fare with the new rules and how oil companies differentiate themselves, as well as we're going to see kind of more data on economic expansion and how the economy has kind of held through the fourth quarter.
So you had said you're more bullish on oil than gas. What would be one of your top stock picks for 2010?
Yeah, I mean, across the space in the oil sector, Continental is definitely a very interesting stock. It's across the board. It's more of a consensus neutral to short across, and I think given their increase in activity, their excellent balance sheet, they're one of the lowest leveraged stocks of the 14 that I cover. That extra activity potential really sets them up to, I think, outperform in 2010. Current guidance is for 10% growth, but I think when you look at their asset by asset portfolios, they could probably do almost double that growth.